please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, European markets have just opened up. Let's see what the initial rates are. Well, we have a couple of those markets that have opened up lower. The CAC as well as the DAX, both of them sitting with a count of around 0.3 to around 0.4%. The FTSE is as flat as can be. Remember, in Friday's trading session, all the three frontliners, they did come in for profit booking. We had a dovish ECB on Thursday, and we saw a rally. But most of those gains were given up in Friday's trading session. And today, in fact, they have opened up more or less mixed, with a bit of a negative bias. But let's come back home, and there are a few stocks that are moving around. You know, our ticker team is keeping it alive. Rima and me have been spotting JP Associates, and I think you should get that stock again up for you. It suddenly moved higher. JK, that's the other stock that's seeing some kind of volume and a bit of an uptake. But JP Associates, keep an eye out on that stock. I think high beta is suddenly, you know, seeing a bit of a bounce. You have GMR as well that's moved higher, Rima.
Actually, the JP Group itself is doing quite well. So JP Associates, you can see on your screen. Let's get JP Infra as well as Jayaprakash Power up for you on your screen from the lows. Both the stocks have seen a recovery of close to about 8 and 6% respectively. There you can see a spike coming in the group itself.
Okay, all right. Let's move on then. ICICI Prudential Life Insurance. Sandeep Bakshi may be appointed at ICICI Bank's new interim CEO. Ritu Singh joins us on the phone line with more details on the same. Ritu, over to you.
Well, thank you for that. There are news reports that actually surfaced this morning that say that the board of ICICI Bank may look at appointing ICICI Pru's CEO, that is Sandeep Bakshi, as the interim chief of the bank until the probe on Chanda Kochhar and the bank's alleged dealings with the Videocon case. That case is closed. There are also reports separately that say that the chairman of the bank, that is M.K. Sharma, he has sought the board's opinion on whether or not Chanda Kochhar should be asked to proceed on an indefinite leave. Now, to just set things in context, it was only in February that CBI launched an inquiry into the Videocon case with ICICI Bank. Although in March, the bank supported Chanda Kochhar overwhelmingly and said it had found its own processes robust. It did take a U-turn, by the time June came, where it said, by the end of May actually, where it said that it would conduct an independent inquiry into these allegations. We have been able to verify, and we confirmed with Justice B.N. Sri Krishna that he indeed will be heading an independent probe that will look into these allegations. Meanwhile, whether an interim CEO will be appointed or whether, what this independent inquiry board would constitute of, there's been no official word from the bank at all. We've written to them several times. But yes, I did manage to speak to Mr. Bakshi this morning. He said, no such intimation has been given to him from the bank's board, and we've been able to verify independently that the board has not officially signed off on the idea of an interim CEO, but the board will meet soon to decide on this because, remember, the whole process of investigation could take 6 to 8 weeks, and therefore it will be required that an interim CEO take charge of the bank.
Okay, Ritu, thank you very much for that. ICICI Bank, of course, is trading higher on the back of this development, a gain of close to about 3.5%, looking favorably at Sandeep Bakshi's appointment as an interim CEO. Is largely credited with the improved fortunes of ICICI Prudential. Under him, ICICI Prudential became the first life insurance company to even go public. ICICI Bank now higher by close to about 4%. But let's shift our focus back to the markets then. Over the weekend, Anuj Singhal caught up with market veteran of many cycles, you would say, Shankar Sharma. He says that barring a few bad apples, the cards still look pretty good. Hear him out.
Are we still in bull market? Because while the Nifty might be at 10,800,
it doesn't feel like
it doesn't feel like that. You know, a lot of my friends say my portfolio.
It's like the weather forecast. The weather report you see.
Exactly.
The temperature 31, but feels like 35.
Exactly. A lot of people say my portfolio looks like 10,200. Some say my portfolio looks like 9,800. And the ones who have been invested in the 1% of the world say that my portfolio looks like the Nifty is at 6,500.
Well, I mean, that's the market for you. It's a mirror with a lot of individual facets. So depending on which facet is suiting you, you can choose that facet. I think for people who were unlucky, and I can only say that, if you're stuck in a stock like Manpasand or even Vakrangi or whatever, I can only put it down to bad luck because, if dodgy accounting is a problem. I think there are many companies, including very large ones, who have the same or similar things. And that's true globally. But, it's your bad luck if, it was suddenly whistled out and, somebody blew the whistle on it. But on the other hand, I think just small caps which are sort of problematic, like these names, I think they have held up very well. And in fact, from the peaks of January, they are down about 25% or so,
yes,
more or less, which in any good correction, you would expect a small cap to fall at least 25, if not between 30 and 40%. That is par for the course. I don't think there's anything untoward at all.
Okay.
And, I think I don't know whether it's been with you or maybe some of your colleagues, that in 2008, that's a very good year to analyze data, okay, about market falls, because that is the biggest fall that a whole generation of investors has seen, and I doubt if we'll see another one like that when 60% index fell.
Yes.
Just an index fall of 60-65%, which tells you stocks fell like 90, 95, 99%, right? If you look at that data, the ones that were below the market in terms of fall, which is below, rather more than 65, okay, which are real estate, commodities, and some banks, infra, all of them had only one thing in common, and which was leverage. All of them had debt. Companies without debt actually fell far less in the market. So the worst in those lots, M&M, etc., were like down 50%.
Yes.
Now imagine in a year like 2008, which is never going to happen to the best of my understanding, the worst that the unleveraged stocks fell was 50%. That means in a normal correction, if you're down 25, 30%, this is not a 2008 by any standards.
Yes.
Nowhere in the world. 25, 30, 40, you're done. This is it. It doesn't get any worse than this.
But what do you think led to this correction in the broader market? Was it the euphoria of last year? Was it just that, or was it the long-term capital gains tax? And you have this ASM, which a lot of people are blaming. What led to this sharp and brutal correction? On an average, the BSE stock, I think, is down about 36-37% on an average.
Well, go back to 2017 for the answer. We had a very, very bad, I think, July or August. Very bad. If you look at the index, you will see, I think the small cap index fell like 15-17%. And therefore, stocks fell again 25 to 35, 40%. 4 months later, nobody even remembers that. Even you have a hard time remembering
yes,
it.
I
Right?
don't.
Think about it. And you watch it every day.
Yes.
Right?
Yes.
Mind scrolls away these events. And we say 2017 was great and 2018 has been terrible. And I say you had a similar fall in 2017, right in the middle of the year. And in fact, it had happened against post-demo. These things happen. Reasons always sort of, conjure themselves up. But particularly in the small cap end of the market, if you're not prepared for a 20-30% cut like this, you have no business being there. So I don't see any of this as being extraordinary. We had a great 2017. The market was due for a correction. It was not due for a bear market. This is not a bear market. This is a good correction in an overall still what is a very strong small cap bull market.
TCS board on Friday approved a big buyback of 16,000 crore rupees at a price of 2,100 rupees per share. But what does this mean for retail investors? Nigel is here with the math behind it. Nigel?
Well, let's first focus on the basic details that we have. 16,000 crores is the total amount, and the max buyback price that they're talking about, or the buyback price that they're talking about, is around 2,100 rupees on a per share basis. But what does this mean? Remember, there's a SEBI mandate out there that if you're a small investor, what is the definition of that? That's if you're holding shares worth 2 lakh or less, then in fact 15% of this total buyback amount is reserved for you. So 15% of around 16,000 crore rupees means that around 2,400 crore rupees are reserved for those small shareholders. To be a small shareholder, you have to qualify that in fact the total value of your holdings is less than 2 lakh. So just going by the current scenario, the current price is around 1,840 rupees odd. So you'll have to buy around 108 shares as of today at a price of around 1,840 to qualify under this 2 lakh odd. So this is the scenario basically that we're assuming. Now, if this happens, then you'll say, what exactly is the acceptance ratio? So assuming that, you have the buyback price at around 2,100, you bought it around 1,840, and assuming 50% of what you buy, that gets tendered into the buyback, then your break-even point comes in at around 1,580. If in fact 75% gets taken in there, then in fact your break-even price falls even further to around 1,060. And finally, if 90% gets bought back in the buyback at around 2,100 rupees, then your break-even price falls all the way to around 500 rupees on a per share basis. Remember, we're explaining these scenarios because the last time almost all your shares got bought back. That is 100% got bought back. Now, we're not sure about what is the gains, but we want to alert our retail audience that there'll be a cost that will be associated. Point number one, there'll be a transaction cost. So at least you'll have to spend at least 1,000 rupees on the buying as well as tendering in of these shares. It can be around 1,000, 1,400 rupees. So one factor is the transaction cost. Second is when you're looking to buy shares worth around 2 lakh rupees, you'll have to borrow that money and then buy it, right? So there'll be either an opportunity loss or there'll be a borrowing cost. So you're assuming these three scenarios that you're holding it for around 3 months because the process takes around 3 to around 3.5 months. At around 8% if you're borrowing, then 4,000 rupees is the cost. If you're borrowing at around 12%, then it's around 6,000 rupees. So there are various costs that you have to factor in as well. And finally, assuming you're making some money, if you make 27,000 in this buyback, assuming all your shares get bought back and you get 250 rupees or thereabouts, then you'll have to pay short-term capital gains of around 4,050. And suppose you're making around 16,000 rupees, then around 2,400 rupees is what your short-term capital gains tax will be. So let's stack these numbers up for you. We don't know what the gain can be, but we have to alert our viewers there'll be a cost that will be involved. One is your transaction cost. Second is your borrowing cost. That will be roughly around, we're taking it at around 5,000 approximately. And there'll be a short-term capital gains as well that you'll have to pay. That's a tax. So effectively, nearly around 8,000, 8,500 rupees is the effective cost to you. And finally, I just want to alert our retail audience out there. Those that got bonus recently, they may go and say, wow, let's go and tender all these shares in the buyback. Remember, there's a bit of a taxation clause out there as well, because the cost of acquisition effectively is nothing. And if all your shares get bought back at around 2,100 rupees, then your effective tax will be 315 rupees odd. We'll have to wait by to know exactly what is the acceptance ratio of retail, but just putting out broad details, in particular for our retail audience. Back to you, Rima.
All right, Nigel, thank you very much for that. Get into a break then. On that note, on the other side, Aurobindo Prasad Gayan of Kotak Commodities. Well, it's time now to get chatting about the commodity space. Manisha Gupta joins in as always. Manisha, looks like monsoon is not coming in the full force that you wanted to, at least by mid-June.
Oh, well, absolutely. You know, in Bombay as well, we haven't really had the best of it till time right here. And IMD says that the next 6 or 7 days also is going to be a slow progress of monsoon. They only expect the monsoon to pick up pace by 22nd of June. So until then, it's going to be quite dull. And the advancement that we usually see by this time going in for the central and the northern India, of course, is going to be quite on the slower side. If you look at the overall numbers, then monsoon till time, overall India is 4% higher than normal. But most of that contribution really seems to be coming in from the southern peninsula. So the southern and the western coast is where you have seen good monsoon progress coming in. But if you look at the other areas like central India, that also has been positive by 6%. But the southern peninsula, as I said, has been the major contributor, up by 47%. But it is quite deficient when you look at northern India. And of course, the eastern and the northeastern part of India, that is also down by quite a bit number, for 21% actually. So that is where the monsoon numbers are coming in from. Having said that, while Maharashtra, of course, is a strong agri belt and the cotton and the soybean sowing has begun here, but the major other belt, MP, Rajasthan and Gujarat, are the states which still haven't seen any monsoon. And there is a bit of a concern when we look at those sowing numbers for many of those agri commodities. Aurobindo Gayan of Kotak Commodities now joins us to talk more about that. Aurobindo, hi. First of all, on these sowing numbers and the monsoon delay itself, how are you reading all of that?
I think the cotton sowing this year, so far, whatever has happened especially in Maharashtra and the northern part of India, is relatively better than the last year. And besides that, if I would say about the oilseeds sowing, then per se, I would say for soybean around 0.5 lakh hectares increment in the acreage of soybean that we are seeing, and so in the case of groundnut as well. But then if I talk to you on the overall oilseed sector, sowing so far this season is relatively steady than the last year. So I think we are looking forward to have better acreage this year, and especially we are very positive of having a good number of acreage under oilseeds this year, because some of the crops are being shifting from cotton to soybean as well. So we are looking forward for a better monsoon, and I'm sure the acreage number for some of the crops are going to be good here. Yeah.
Since we are talking about agriculture, any strategy, any price movement in a major way that you are expecting here in days to come?
I think a very short-term perspective, I would say soybean is something that has been declining for the last couple of weeks. I think some more weakness could be seen in the prices. So I think we recommend going short in soybean at this moment, and should not be panicking that price is coming down by another 70, 80 rupees or maybe close to 100 rupees per quintal. So we recommend going short in soybean prices. And besides that, I would say that keeping the international fundamentals of cotton beside, the domestically, I think looking at the scenario here, the cotton prices are to remain on the positive side, and we are already seeing spot prices above 47,000 rupees. So any dip in the prices should be a buy in the physical cotton, as well as anybody who wishes to trade or hedge the position at MCS should also look for getting into MCS June and July contract to hedge their position.
Okay, all right. Thanks so much for that, Aurobindo, as well as Manisha. Well, on that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next.